Hello everyone, this is Rachel live from Kalkine Studios in Sydney. You're watching the early trades. We have been witnessing inflation expectations in the market psychology. Overnight, US stock markets continued a losing streak as losses across all sectors deepened amid a dwindling risk appetite among investors and a sharp decline of cryptocurrencies. Let us now cast an eye over how Market Charter is panning out today. Defying global sell-off across markets and assets and defying inflation anxiety, the ASX 200 is trading roughly 0.3% higher today after setting a new 20-day low. The iron ore miners are weighing down the benchmark index, with the broader materials sector trading in the red. The energy sector is also trading in red amid oil prices edging lower. However, gains in IT, telecoms, healthcare and financials are keeping the market momentum. Yesterday, the ASX 200 had one of the worst sessions in the last few weeks. The benchmark index registered a sizable decline of 1.9% and closed at 6,931.7. That's the lowest closing since the 8th of April. Shares in payments company EML Payments are on the rise today after being a top loser on the ASX yesterday, with their shares tumbling over 44%. That was after the company said that the Central Bank of Ireland may take actions to restrict its Irish subsidiary PFS card services. Notably, PCL SIL contributes 27% of the group's global revenue. The CBI's concerns relate to anti-money laundering, counter-terrorism financing, risk and control frameworks and governance. Meanwhile, Eagers Automotive, that's Australia's oldest listed automotive retail group with new and used cars, trucks and bus dealerships, is also trading in the black today. The company states that while some uncertainty remains in the external environment, they believe they have now navigated the worst of the global pandemic in Australia and are focused on delivering improved performance and earnings per share growth. In other news now, Australian agricultural chemical company Nufarm is also climbing up the ASX 200 ladder today. In the 6 months ending 31st of March, the company reported that net profit rebounded to $59 million from a loss of $122 million in the corresponding period of last year. The group revenue was $1.65 billion. That's an increase of 20% from the corresponding period last year. The company reports that this was experiencing unusual strong early demand for products due to improved seasonal conditions, particularly in the APAC area and Europe, which will weigh towards earnings towards the first half. Next, let's talk about the flag carrier of Australia, Qantas. Their shares are also edging higher today after issuing a guidance update on its road to recovery. A sustained rebound in domestic travel demand and the performance of its freight and loyalty divisions, which continue to drive the Qantas Group's recovery from the impacts of COVID-19. Based on current trading conditions, the group expects to be statutory free cash flow positive for the second half of financial year 2021. Importantly, the role of domestic travel demand in the group's recovery is highlighted by the fact revenue from domestic flying is expected to almost double between the first and second half of this financial year. Moving on now, let's look at sector-specific charter. Iron ore futures, their price fell 0.6% to $211.96 per 500 dry metric tonnes. Noting a fall in the industrial metal prices, Australian miners such as the BHP Group, Rio Tinto and Fortescue Metals are trading lower so far today. And it seems to be a challenging day for the Australian energy producers such as Santos, Beach Energy, Woodside Petroleum and Viva Energy to hold their ground. Oil prices dropped considerably on Wednesday. That was amid concerns over rising COVID-19 cases in Asia and also inflation. In addition, progress in the Iran nuclear deal is expected to add between 1 million to 2 million barrels per day extra into the market, and that could create a crude oil surplus into the market, which would squeeze oil prices. Brent crude futures were down around 2.9% to $66.69, while US West Texas Intermediate crude futures lost 3.2% to $63.43 a barrel. Moving on now, let's talk about IT players such as Afterpay, Altium and Xero. They're among the top 5 ASX 200 gainers today. Looking at the technology sector charter, Nasdaq Composite closed almost flat on Wednesday, despite a decent gap down showing strong relative outer performance against the Dow Jones and the S&P 500. Next, let us look at how other major newsmakers in the Australian market today. Petroleum player Ampol has announced its future energy and decarbonisation strategy, highlighting a series of new commitments and initiatives. For instance, by 2025, the company operations are expected to use 40% equivalent renewables, along with a 25% reduction in operational emissions on an absolute basis from 2021 levels for convenience retail, and a 5% reduction in operational emissions intensity from 2021 levels for fuels and infrastructure. Moving on now, Evolution Mining says that it has completed the acquisition of Battle North Gold for 343 million Canadian dollars. They say they intend to provide further details on the long-term outlook at the Red Lake operation early in September 2021 quarter. That's post-integrating the Battle North assets into an updated life of mine plan. Now, resource player Aluka Resources has withdrawn its production outlook for Sierra Rutile. The company will suspend operations at the project by the year end. The next news comes from Australian agricultural company that reported statutory EBITDA profit rise of 24% during the financial year 2021. The net statutory profit jumped 45%. The world's leading provider of drilling services, drilling equipment and performance tooling, Boart Longyear, says that the S&P Global has lowered corporate credit rating of the company to D from a CC. The rating outlook has been removed from Credit Watch Negative. Next, let us zoom our lens at the crypto charter that defined broad sell-off across the world this week. Virtual currencies plummeted sharply on Wednesday, leading to a massive sell-off in worldwide crypto markets. Prices of top crypto coins like Bitcoin, Ethereum, Cardano and Dogecoin tumbled sharply. Combined value of almost 10,000 crypto coins tracked by CoinMarketCap shrunk by $1 trillion in less than a week to settle at around $1.3 trillion. The cryptocurrencies plunged to mark their worst fall this year after China's crackdown. Chinese regulators have tightened their restrictions on the use of cryptocurrencies by banning financial institutions and payment companies from providing services related to crypto. 2 days ago, a Twitter war broke out between Tesla's Elon Musk and crypto purists because of Tesla's Bitcoin suspension over environmental concerns. Crypto analysts have been criticizing Mr. Musk for being a manipulator and causing volatility in the crypto industry. Bitcoin plunged to its lowest level since January at $30,000 following China's decision, while rival cryptocurrencies such as Ethereum sank 28% to $2,444 and Dogecoin crashed as much as 50% to the day's low of 21.5 cents. Crypto exchange Coinbase plunged around 6%, while Silvergate, the Bitcoin bank, declined around 3%. Bitcoin miners Riot Blockchain and Marathon Digital Holdings lost 7.5% and 9% respectively. However, the cryptocurrencies sharply rebounded from the lower levels, still trading with double-digit losses. This week has been overflowing with crypto investors' fear, uncertainty and doubt. The overall crypto market plunged as much as 45% since Mr. Musk tweeted the Bitcoin suspension from Tesla's payment gateway. The last few days have been stressful for crypto investors, reminiscent of the 2017 bubble burst. On a brighter side though, few optimistic analysts and digital asset managers have been calling this dip a discount for new entrants. Moving on now, the Australian Bureau of Statistics has released April's employment figures, showing the unemployment rate decreased to 5.5%. In March 2021, the unemployment rate decreased to 5.6%. Experts see the Australian dollar reacting to the numbers following this release. The market would also await April's retail sales data due on Friday. In the March quarter, the Australian wages growth rebounded from record lows of the last quarter, but was still far from the levels desired by the Reserve Bank of Australia. The wage price index for the March quarter, that's a key gauge used by the Reserve Bank and Treasury to measure wages growth, rose 0.6%. The market is expected to take cues from the data in today's trade. That's all from me for now. Stay tuned for more live updates on Kalkine TV across the economy, markets and sectors. I'm Rachel, signing off for now.